This is a video that you absolutely have to watch from start to finish. A ton of information is going to be in this video because I want you guys to be prepared for anything. And there's some things that are looming that could actually cause a lot of people to lose money. But if you know exactly what you're going to do, you can actually gain a lot of money. All right. All right. So today is brought to you by Stock Up You. That's going to be the top link below. We're going to get to that later. Let's get right into it. Now, here's the question. The Fed and the rates. That's what we got to talk about. If the Fed cut interest rates, if there is an emergency meeting, it could send us into a recession. It could. It absolutely could. And it would actually could send the market down even if we don't go into a recession. Let me say this again. By the time they tell you that we're in a recession, the recession has been going on for months. As a matter of fact, minimally, by the time they tell you we're in a recession, minimally, we've already been 3 months into the recession, right? The truth is, it's closer to 6 months because we are looking at data that is, from something that happened a quarter or 2 quarters ago. Remember, we need 2 quarters of decreasing. It'll come to me in a minute. I'm not going to stop it. Let's keep it going. All right, GDP, gross domestic products. We need 2 quarters of that. So we need at least 6 months, right? So the data that we're getting is reactive. All right, let's keep that in mind. So here's what I want to go through. All right, look at this. Over the past 10 years, the S&P average has gained pretty much flat, all right, for August, making it the 3rd worst month, okay? Making this a bad month anyway, right? So this is the 3rd worst month. See that? Got to keep together. So the 3rd worst month. So it's already historically a bad month to be in the market. That's what I wanted to tell you. Already a bad month to be in the market. But let's see what normally happens when the Fed actually cuts rate. Now, I'm sorry, but you could actually turn this sideways because I don't want to cut it off. All right, so let's raise that a little bit. Look at this. S&P 500 rose in 4 out of 6 occasions 12 months after an interest rate cut. 12 months after. But what usually happens on the onset of rate cuts is the market actually goes down. The Fed is due to lower interest rates when? September, right? Remember that. So if you look at this, the 1 month, we're going back to 1994, 1989. This is when the Fed actually lowered interest rates, okay? So what happens 1 month after the cut, it was pretty flat, okay? But what happens 3 months after the cut was mixed from 1984 down to 2001. So 2001, we understand what was going on, right? So it's not always clear cut, all right? In 1984, 3 months after, it went up, right? But in 2001, it went down, greatly went down, okay? And here we go, some similar dates, okay? But 6 months after. So 1 month after it was flat to negative, then 6 months after in 1984, see here, 1984, it actually went up, right? So what it's showing us is that the opportunity to buy is shortly after the interest rate cut. Now let's look at this chart, right? Seasonal patterns, best and worst months for stock market. All right, you will see this. Okay, so this is the New York Stock Exchange. This is the S&P and this is the Nasdaq. Okay, the S&P and the Nasdaq. All right, so we could see up months, weak months, best 3 months, worst months. When was the worst months? September, June, September. February, June, September. See that? June, August, September, all right? Worst months, right? So we know that September in the NASDAQ, S&P, and the composite are all the worst months. But when are the best months? Here is one of the things we got to look at. November, right? Why are you sharing this with us, Larry? Because this is an election year. And remember, when I showed you guys the chart about the election year, what normally happens when there is an incumbent president that is running again, though he dropped out, but there's someone else running in his stead. And so I believe all things fair, it stays the same. That the market usually sells off from June to October, all right? And encompassing September as one of the bad months. And that is the time to buy. And then November is one of the better months. See here? November. Let me bring this down. Sorry, I shrunk it. November, best 3 months. So which one is consistent with all three of these? November. Now, September, oddly enough, is when the Fed is going to cut interest rates. And November is when we're going to have the presidential election. So what are you saying, Larry? What I'm saying is y'all better save some dry powder for September, because everything that I see is saying that we need to be buying in September so we could do some haircuts or some profit taking in November. Let's listen to this.
But you thought the Fed was once again, for the second time, staying at the party too long and too restrictive.
Absolutely. And, this may surprise people. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting.
Let's say that Jay Powell came out and before September, an emergency meeting comes out and he lowers the rate. Does the market rip, or does the market say, oh, my goodness, it's worse than we even thought?
It rips. It welcomes it. Absolutely. Because it's so far behind the curve right now. The Fed is up in the
But that's why I'm saying maybe it doesn't rip. Maybe people say, oh, goodness.
No.
If they're willing to make an emergency cut today, boy, there's got to be something around the corner.
It's not going to happen today necessarily.
Not today. I'm saying in the next couple weeks.
It could happen, and I think it should. I think they should say, listen, we're taking a look at you take a look at the data. It is not at all comforting.
So I agree with him. The Fed overstayed. He should have started cutting, right? So I don't agree with him that the market will absolutely rip. Though I've said it before, but it's delayed. So all of the data we just looked at, here's a recap, all right? I think outside of the box. I don't take one thing that anyone say. I put it all together, and so far I've been making good money and good moves. I think, and I'm planning accordingly. You let me know what you plan to do based on all of the information I just shared with you. I think that the onset could, because it's an election year, right? So you just put everything together. I think that September, you need to have some dry powder. I am. Anything I say is not a suggestion for you to buy, hold, or sell. I'm going to have some dry powder for September. Yes, as you saw, I did some buying now. And if we have another sharp dip because of the onset of war, I will buy some more and I will hold. And then in my swing trade portfolio, I'm going to have some dry powder for September. Even if I have to slow down my buying now, I'm going to have some dry powder for September. This is Larry. And then I'm going in, right? And then after I go in with that dry powder in September, then I'm going to be prepared to do some selling in November, because depending on who wins this race, I do believe that if the incumbent party does stay in, I do believe that they will let a recession happen sooner than later. All right, that's the conspiracy in me. All right, let's not get into. That's just what I believe, good people. I keep it 100 with you guys. Okay. Listen, this is one of the things I'm going to tell you guys. Invest, learn, test, earn. Invest, learn, test, earn. Invest in yourself. All right. Learn what you purchase. Test it and then earn. Invest, learn, test, earn. And that's what you do with Stock Up You. And I want you guys to listen, invest in yourself first and start here. All right. Everything you need to know about the stock market and how to make money is in here, and it's made for you. It is, my theory is talk to me like I'm 3, and with stocks and crypto, good people. I put it all in here, and there's more coming. Okay. And so invest, learn, test, earn. Okay. But that first investment should be in your knowledge. I'm going to leave it right there. Let me know what you think about the overall video. If you like what I've been bringing to you guys, make sure you hit that like, subscribe, and that notification bell. When you get home to your computer, make sure it's checked for all. It's kind of difficult to do on the phone, and we're going to make money either way it goes, whether it's a correction, whether it's a crash, whether it's a recession, it doesn't matter. We will make money. All right. Love you guys. We'll see you later. Live, love, laugh, and learn.